Hello, this is Matt on the Moon Lambo channel. Take a look at this headline from the Crypto Basic. XRP whale activity taps multi-month highs as 452 $100,000 plus XRP transactions recorded in few hours. So I'll say this at the outset. Over the last, call it, I don't know, 4, 6, maybe 8 weeks, there have been a handful of very peculiar days in terms of activity regarding XRP on the XRP ledger. Do you remember when inside of like an hour or so, there was trading volume spiked like 18 billion? That wasn't some sort of glitch. This is recorded on the open source blockchain that is the XRP ledger. You can see the public transactions. So look, I don't pretend to know what all of this is, but I will say that I suspect that as adoption of the XRP ledger and XRP specifically increases, and right now at the moment I'm saying this, I'm thinking about on-demand liquidity, I suspect we're going to continue to see notable bursts. So I don't know if some of this is just some perhaps practice transactions, because we don't know what's being done in the background. Let's be real. None of us know. I don't pretend to have some sort of insider information here. I'm just a dude on the internet. But think about this. News broke the other day that for the first time, an actual bank, is utilizing Ripple's on-demand liquidity, which means XRP as a bridge currency. And they had to go through Brazil. There's a bank in Brazil called Travelex Bank. They had to go through the Central Bank of Brazil to get that approval sorted out. And it took over 2 years, and we now know that. This was in the works for over 2 years. So it just kind of begs the question, what other really big stuff is going on in the background that might result in even just test transactions? Because look, if you're going to start out, before you even formalize an arrangement where that you say, yes, we are going to use on-demand liquidity, wouldn't you do some of those transactions first? And I can't help but wonder if some of this is what it is, but we don't know for sure. We can just see the transactions on the XRP ledger, but as far as who is it, it's not always so obvious. So anyway, I'll share with you what is known to this point. But before going any further, I do want to be clear, I do not have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. And you'll see as we go through this that this data was initially reported by Santiment, which is a firm that does on-chain analytics, and I've been a fan of Santiment for some time. I pay attention to them. I follow them all up on the Twitters, and when they have something to say, especially if it's about XRP, I'm definitely paying attention. It's pure data, right? So anyway, piece reads as follows. XRP sees a spike in whale activity on Friday. Santiment, in a tweet on Saturday, noted that in the final hours of trading, XRP saw a spike in whale activity with about 452 transactions over $100,000, the highest since May 13th, further highlighting that positive sentiment is at its highest since April. According to Santiment, it is the largest amount of transactions in over 3 months. So I'll pause to note, this is kind of interesting for a couple things. I'm sure most of you are aware at this point that it was a bloody day yesterday, relatively speaking, in crypto markets. Everything tanked in tandem, and it's true. So stocks did too. If you looked at the S&P 500, the Dow Jones down at the same time, and in crypto down on the same day. And that's why it's also kind of interesting to see here, as far as when these transactions occurred, it occurred at the end of the trading hours for that particular day, not as everything was necessarily tanking. And Sentiment's still stating in terms of sentiment, not looking too shabby here. And so here is the actual tweet from them, which reads as follows. XRP is seeing notable whale activity and high optimism in Friday's closing trading hours. We've picked up a spike of $100K plus XRP transactions that hasn't been equaled since May 13th. Additionally, sentiment is at its highest since April. That's how the tweet reads. It is worth noting that increased price volatility tends to follow increased whale activity. Notably, the XRP network has seen increased activity in the last few days. And for example, on Thursday, the Crypto Basic reported several large XRP transactions between exchanges and unknown wallets totaling 844 million XRP, worth about $315 million. And on Tuesday, Crypto Basic also reported several large transactions totaling 300 million XRP. And just as a reminder, I'm sure some of you would be aware of this, but I'll just be brief on this, but What I was referencing at the outset of the video here regarding the crazy spike in about an hour or so on a particular day regarding XRP volume. This story broke. This is from July 17th, so a little over a month ago from you today. The headline was, XRP rapid trading volume surge may result in unusual price action. So, okay, as far as the price action that could have potentially resulted from this, that was just speculation on their part. Okay, that's fine. There was nothing wacky that happened in terms of price. But still, this amount of activity did occur. And I don't want to read the article, but I'll just point out here, the numbers that they cite here, is that in about a period of an hour, volume jumped up to 18.7 billion XRP, which at the time would have been, what, $6 or $7 billion worth of XRP? 6 or 7 billion XRP. Yeah, no, in terms of dollars, that wouldn't right for a 24-hour period. Well, that's what it was just inside of that 1 hour. But what I wanted to say is if you just compare inside of that roughly 1 hour, that $6 or $7 billion worth of XRP moving around, compare it to a normal 24-hour period. As you can see on the screen here, I've got Live CoinWatch pulled up. In the last 24 hours, global XRP transactions have only been 565 million. 565 million. And that's fairly normal for times like this. 565 million. Compare that, though, again, to a spike of 6 to 7 billion inside of like roughly an hour. Maybe a little bit more than that. So who's doing that? Like, who is doing that for S words and giggles? Like, who's doing this? And I don't have the answer, but I'm just sitting here thinking, like, there must be some sort of reasonable explanation here. I can't help but wonder if it might have something to do with some sort of testing regarding even just on-demand liquidity, but I haven't seen any good leads on this. So if anybody knows anything, because I don't pretend to know everything, please feel free to drop a comment below. If you've got some hard evidence on something like that, or make it a good reason to speculate in a particular direction, then I would be very curious to see that. I'm just as curious as everybody else out there. But regarding the price action yesterday, this was kind of funny. I found this interesting. I thought I'd just mention this, but this is a headline from you today. Yesterday, crypto plunge was extremely brutal for traders, social media data says. Now, what do you think that they're tracking here? I found this kind of comical. Take a look at this. Sentiment, a feature-rich blockchain research platform, measures the sentiment of traders by analyzing messages on crypto Twitter. It seems that yesterday there was little optimism there. According to the statistics shared by Sentiment on its main Twitter account, its automated analysis system registered an impressive spike of pessimism on Twitter. And what they're referencing here reads as follows. You guys are familiar with the term wrecked, right? R-E-K-T. It's a play on the word wrecked, W-R-E-C-K-E-D, right? So anyway, what Sentiment tweeted is the following. The term wrecked, R-E-K-T, has been skyrocketing in crypto as long liquidations were plentiful to end the week. As many traders were riding the upward price trend since late June, Bitcoin's dropped to $20,800 and Ethereum's dropped to the low 1600s caused chaos. Not surprising. So that's why I'm saying, like, it's not surprising to see that. But you know what did surprise me is that the term wrecked was used more heavily over that period, that 24-hour period, than when the Terra Luna collapse started in May, because that's what kicked the whole May-June sell-off, as they ended up highlighted in this article, because it set off what was known as the contagion, effectively. And that's when things really started getting bloody. So it's just kind of interesting to note that yesterday people were using that word in even greater volume. But it is the right thing. This is why, like, for me, I am not going to ever be a trader. I have no desire to be a trader. I don't think I can outsmart anybody in terms of figuring out when markets are going to spike, way to the positive, or when they're going to crash. I just understand in a general sense that market cycles are real. And there's so much data just proving that people are horrible at timing this stuff. And they do get wrecked, R-E-K-T, wrecked. But not Moon Lambo. Moon Lambo ain't getting wrecked unless everything goes to zero forever. Because I'm just going to sit here and be patient, man. It's all just a matter of time. And by the way, you know what's been happening? Despite all the fear out there, and there's plenty of fear in the market, major firms have been investing some serious money. Now, over the last couple of weeks in particular, we've been talking a lot about BlackRock for very good reason, I argue. My gosh, talk about opening up the floodgates. It's incredible what they're doing. They're basically copying Grayscale's product, but they're the largest financial firm on the entire planet. And they want to turn that, I believe, into an ETF, which would open up the concept to like a situation where if they're approved by the SEC, if they get a spot Bitcoin ETF, it's going to open it up to the everyday man. It's like the type of person that maybe they're not in crypto yet. Most of the world isn't anyway. It's only like 2 or 3% of humans are into crypto. But for the type of person, even if you're like aware of it, it's like peripherally on your mind, something to that effect. You just haven't jumped in. I don't know. Is it a real thing? Is it a scammy thing? Is it safe? Whoa, I have to open up an account with this Coinbase thing or pick an exchange. I don't know how any of that works. So people just sit on the sidelines. But if you can get exposure to the asset class by using the platform that you're already using to purchase stocks, that's a game changer, because that's what we're talking about with a spot Bitcoin ETF. You're getting an exposure to an exchange traded fund on like NASDAQ or New York Stock Exchange. And if it's coming through BlackRock, which is the largest investment firm on the entire planet with currently about $8.5 trillion worth of assets under management, that's why it's that big of a deal. Because physical Bitcoin is going to be held to back all of this. It truly is a game changer. It's going to be, not that, I don't know that's literally going to happen like snap of a finger, but they're coming in and it's going to be gigantic. There's not that much Bitcoin left. And even without them, to see that Bitcoin's already gone up to $70,000 and XRP, with way less than 1% of humans having ever purchased it, already ran up to almost $4 several years ago. Like, where do you think this is all going? It's just, I love how early this is. And it's so neat to see these firms out here. If they didn't believe that this was going to have staying power, this asset class, they wouldn't be doing what they're doing. And that's why it's so neat. So the headline here from the Daily Hodl: BlackRock, Google, and Morgan Stanley investing billions into blockchain and crypto technology. Report. 40 of the world's top 100 public companies by market capitalization are reportedly pouring in billions of dollars into blockchain and crypto firms. According to a recent report from crypto analytics platform Blockdata, 40 firms have invested about $6 billion into blockchain and crypto companies between September 2021 and June 2022. Using figures from market intelligence platform CB Insights, Blockdata reports that Google's parent company, Alphabet, has the biggest stake in blockchain. The California-based firm invested $1.5 billion in startups Fireblocks, Dapper Labs, Voltage, and Digital Currency Group. The world's largest asset manager, BlackRock, is the next biggest blockchain company investor, with $1.17 billion worth of investments in FTX, Circle, and Anchorage Digital. And I'll just pause and note, wait until this is all said and done. Don't be surprised if BlackRock has the heaviest hand in all of crypto at some point in the coming years. Don't be surprised if that ends up being the case. Anyway, piece continues. Banking titan Morgan Stanley ranks third with $1.1 billion invested in Figment and NYDIG. And here's a quote: "The investors active in the biggest funding rounds are Alphabet, $1,506 million in 4 rounds, BlackRock, $1,171 million in 3 rounds, Morgan Stanley, $1.1 million in 2 rounds, and Samsung, $979 million in 13 rounds, Goldman Sachs, $698 million in 5 rounds, BNY Mellon, $690 million in 3 rounds." You get the point, right? PayPal, $650 million in 4 rounds. You get the idea. Very serious money, and a lot of this stuff is just happening at a time where we're supposed to be scared that everything's going to cease to exist and it's all going to zero. Well, they sure as hell don't think so, and they're putting serious money into this. Piece continues. Among the group, Samsung is the most active, having invested in over a dozen crypto firms. The South Korean phone maker infused over $979 million to 13 companies. And then they go into cite what they are on the screen. I don't feel it necessary to read them, but I think you're kind of getting the idea here. And the entire asset class moves together, so it's just a waiting game, folks. It's just a waiting game. All good things in time. I am not a financial advisor. You should not buy or sell anything because of anything I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.